Hey guys, so I've got Frank Cava here. He is from Richmond, Virginia. He's actually in my market, and Frank is probably one of the smartest guys in the business I know. He wholesales a ton of houses, does fix and flips, new construction, taking down portfolios of properties right now. So I'm really excited to chat with him. And so Frank, let's just kick it off. Why don't we start at the beginning? How'd you get started in this business? I mean, you've clearly come a long way, and we'll get to where your business is now, but let's talk about the beginning first.
Sure. So I grew up in a construction family. I used to go to work with my dad and my granddad when I was a little kid. I went to the University of Florida and got a degree in construction management. I'm not smart like you. I couldn't get into UVA. So I went to Florida, I got a degree, and construction management is kind of a cross between like civil engineering and architecture. So that's what I did. And then I went to work for a home builder in the Virginia market up in DC out of college. So I started off like building houses, and then I moved into sales, and then I moved into management. And in the last 5 years I was with them, I was a vice president running an operation. So I got to see everything from the standpoint of acquisition, sale, construction. And then when I started my own business in 2009, I kind of just, the market stunk and real estate was a falling knife. So I went out and bought one house. I bought it in cash. And then I was like, it was in an existing neighborhood, and I fixed it up. I made it nicer. And then I staged it with like furniture for my spare bedroom. And then I sold it and I made like 40 grand. I was like, all right, I'll do that again. So I did that like, 3 or 4 times, and I kept doing that. And then eventually I built a team, and now I've got 12 full-time employees. We did 213 deals last year, and we own a portfolio of rentals like north of 175. So we've kind of built the business. Like anything else in life, it starts kind of slow, and it's really frustrating. But if you stick with it for a while, what ends up happening is over time, you look back and like, oh, damn, that happened pretty quick. But it really didn't happen fast. It's just constant, consistent movements.
It seems like it happens fast. You always hear about guys and you think they're overnight successes, and they've been grinding away for 10, 15 years trying to get there.
One of my favorite statements is go work your ass off for 10 years, have favorable market conditions, and someone will tell you look like an overnight success.
So you came from a big operation, right? So when you worked for a big operation, do you think that helped you to build, because the operation you're running now it's a lot bigger than most people. I mean, you're as far as I know, you're the biggest wholesaler in our market. You're probably doing the most amount of marketing in our market right now. Right. You've got a massive team. So I feel like a lot of investors they never reach that point, right? Because a lot of us start out as solopreneurs, and some of us don't know how to get to that level. Some of us may not want to. So do you think that helped you coming from a sort of a bigger operation background and seeing how that's run?
It certainly didn't hurt. It gave me the opportunity to see a huge business and how it was run, and it taught me. But what it taught me is it taught me new construction, it taught me construction and sales, right? And it also taught me management. So what I used to do, and it's probably something that a lot of people do, is I used to hear other successful investors when I first got out on my own, and I'd listen to tapes and I'd read books and I'd do all this other stuff. And I remember a guy out of Arizona. He was an accountant, and he was really good with numbers. I remember thinking, oh man, I wish I was good at numbers. And then I would look at somebody else from like Phoenix, and they were really good at, they used to be in used cars. And I was like, oh man, I wish I was in used cars. And then what I started to realize is they all had unique skills, but I had unique skills too. And I have a personality, I have experiences, I have my strengths. And what ended up happening for me is when I got really good at being true to what I was good at and what I wanted to do and what my gifts are, and I embraced those, then things started to take off. And so we all want what's the easy, quickest path, but then we realize, you know what? We got to figure out what suits us the most, and we got to do that. And I know I run a business that's much bigger than many people want. I mean, people always ask, how many rentals do you want? Like, I don't know. I want to keep buying rentals until I die because it's fun.
Yeah.
So what else am I going to do? Watch, The Price is Right. So it's like, I like that, but it suits me. So the education I got with that company really did help. But then it became me embracing what I wanted to do, what I'm good at, and kind of growing it from there.
So what's your unique ability then? Because clearly you figured that out and you got out of your business's way, essentially, right? You hire the right people for everything else. So what would you say your unique ability then is that you've capitalized on?
So most corporate, like you worked at a big bank, right? So you worked at a couple of big banks. Like you saw huge operations. Inside of huge operations, you need to be tactically strong at least one job or you're not going to keep a job. And if you become a manager, you need to be functional at that job and then be able to have people come to you with problems that you can help support, hold accountable, do those things, right? So I know how to build, I know how to estimate, and I know how to sell houses. But then I also know how to manage. So I am good enough at everything inside the business where I could physically do it, and I have done it. But my unique ability is I find good, strong, talented people. Then I give them very clear direction. So everyone has a job offer here, and inside of their job offer, they have somewhere between 3 and 5 core tasks. And then I get the hell out of the way. I hire smart people, I let them go do their thing, and then I hold them accountable, but I provide support. If they don't need accountability, I provide support. So they may ask me questions about values. They may say, hey, should we add a 3rd bathroom to this house? I then suit my staff's needs. And because of that, I've been able to grow in an exponential fact because of exactly that.
Would you, and I think that's challenging. And again, sort of, I talk to a lot of entrepreneurs, right? A lot of low level, medium level, high level entrepreneurs like yourself. And I know for a fact, hiring is a pain, right? A lot of people either don't know how to hire properly, or right now in this market, it's hard to find good talent. It's hard to find good people. So would you say you have a unique way of sourcing and cultivating talent that you can share? Or is it just, you've just been lucky, or have you kissed a lot of frogs and sort of eventually found your, prince or princess? Or
so for your listening audience, is my business bigger than most of theirs?
I would say so. Yeah.
Okay.
Not everyone, but yeah.
Okay.
Well, yeah.
Do they want to get as big as, do most people want to be this big, or do most people want to do a handful? How does it work?
I think when people hear about your business and they hear about your deal flow and they hear about how many deals you're doing, and if we start talking profit numbers, everybody's going to say, I want to be that guy. Right. But I think in reality, very few people, I'm not going to say very few people, a lot of those people probably will not want the responsibility. Will not want to manage that many private lender relationships, will not want to manage that many employees. But people probably think they want to be you, right? Until they actually sort of see everything that's involved.
So this is what I realized pretty early on. When I first started this business, I was attracting people that were on par with my business. I was doing 30, 40 deals a year. I could afford to pay them 50 to 75, 100 grand. And that's what I was attracting. And I was constantly having issues with turnover or morals and ethics and things like that. So like, unless you have a brother or a wife, or you've got someone who's wedded to the entire process like you, like a lot of people in our business that were small have a partner. So those people partner up with one other strong person, the two of them go and work, and they basically let the chips fall where they may, they work their asses off, and they both make a lot of money, like a couple $100 grand, a couple $1 million, whatever, but they do really well, right? But it's a lot of grind, and you have one other person you can rely on. What I started to notice was I kind of stopped, and I was like, okay, I think I'm a talent. I think I'm worth money. I think I'm worth hiring. What would I want? Well, I want a good solid wage. I want to know that I have the ability to grow. I also want to know that the company is going to be here for a while. And I need health insurance, and there's like needs that I have, right? So if you don't have like benefits and health insurance, and you need to pay someone enough where they can go buy those things. So what we started to do was we started to do well enough success financially, where instead of me just giving myself extra money, I invested it. I hired people that I could pay more money to. I spent a lot of money on talent. Like the person who makes the highest earner last year in our business made over $250,000. So that's a lot of money. Yeah.
And that's your, I'm guessing that's your acquisitions manager?
Right, and then I brought in a business partner. He makes a lot of money too, but the upside of it is they're both really good. And then I have a lot of other people who are still quite good that make a lot of money. So like we have the ability to share. So that's number one. Then we did other crazy things like I offer health insurance. I have 12 people. We offer health insurance. It's really expensive, but you can't get top-end talent if you don't offer benefits. So those are the things that I looked at. I was like, okay, I can make an extra X number of dollars per year myself, but what I'd rather do is invest back into the business and scale. So then the last thing I did, Daniel, which is big, I'm corporately trained. So we can't, as small business owners, afford an HR department. So I partnered up with a headhunter company. I don't know if I even told you this, but I have a headhunting company that's up in Buffalo, New York, right? Like shy of Mexico City, Buffalo, New York is the second cheapest place on earth to find talent. So they go out and they go beat the bushes and they actually hire talent for not only me, for other entrepreneurs in our space. And what I did is I created 6 job positions that would service 85 to 90% of the needs you'd have in a real estate business that looks like mine. So office manager or admin, inside sales, outside sales, construction manager, and I also have like a general management position, which you can pivot to like a GM CEO type, or you could pivot it to a someone who does property management, for example. So the headhunting company will then talk to you individually. You'll pay a small fee, and then you pay the balance once you actually hire someone. In most instances, what do you think it costs to hire someone? If you use a headhunter, what does a headhunter usually charge percentage-wise of salary?
I would guess, and I used to deal with this all the time, 20-30% of their first year salary, roughly.
Exactly. Yeah. And some as high as like 40. We've got into.
And these people will move down from Buffalo? Like they're sourcing people in Buffalo, or they're sourcing people here in Richmond?
They put ads out everywhere. Indeed. LinkedIn, everywhere you can possibly imagine, right? And then what they do is they have a young person who lives in Buffalo. So we have the job descriptions. In my business, what I do is I then call them up and say, okay, I'd like to hire this position. So right now we're currently hiring 3 new people. It's a scheduler and 2 full-time project managers. So the folks in Buffalo talk to me and I say, here are companies that these people have probably worked for. This is what's probably on their resume. These are the things that I need them to have skill set wise. Then someone in Buffalo who's making like $10 an hour, which is like $1 million a year, and like where we live. So that person then goes on the internet and scours LinkedIn, and they scour all these things. They make connections. Most good people already have jobs. Yeah. So you asked me what's my unique skill. My unique skill is letting other people do things they're good at. Yeah. I have a headhunter who goes and finds me talent, and then what they do is they give me 3 resumes, and they say, I've always given them a psychological profile test, and here's your 3 resumes. Who do you want to hire? And then I do almost no work. They do all the work for me, but it's inside of confines that I've built.
We do something similar for my companies, but we use somebody local to Richmond. But it's a very similar process where I hand off the entire process over to them. They only bring me somebody once they've made it to the final round for an in-person interview, when they've narrowed it down to 3-4 candidates. And we've had some success with it, but it's just a challenging job market right now. Like you said, right now, everybody that is good is employed. They have jobs. So the only people that are sitting on Indeed all day long actually looking for work are probably not going to be your ideal candidates. That's what we're finding. So
that's why we have people who are aggressively going after people from LinkedIn who have jobs at certain places. So we just hired someone who's a high-end project manager for us. He's expensive. He's a 6-figure a year hire. But he worked for a local builder. If I told you the name of them, you would know them. And we poached him because I gave him an opportunity he didn't have there. He works directly with my business partner and me. He helps make decisions. He is involved in things that he thinks are enriching. And because of that, he was willing to leave, because I told him in 3 to 5 years, I don't want to be in this chair. I want to be doing something else. And I want you to replace 1 or 2 people along the way in the next 3 to 5 years. He found that enticing. Plus, I give him the ability to move the needle. So I spoke a language to him that allowed him to want to come to us. And that's the same thing I do with every single position. Like, if you want to grow, you can either do it through hard work all by yourself, You have to find people. And what you need to understand with people is just like you, they don't want to be doing the same thing 5 years from now. They want to grow. They want to feel enriched. They want to feel empowered. So if you give them those opportunities, you teach them the fundamental skills, you let them enjoy what they're doing. Work is a 4-letter word for a reason. It's work. But if you give them an enrichment along the way, they don't just have a job. They begin to have a career. And I want to be someone who gives people the opportunity to grow. And that's what we do. And because of that, we've got a great team.
So I think it's very important. I mean, the main takeaway that I'm hearing is to attract good talent, you really exercised empathy, right? You put yourself in their shoes and said to yourself, if I was a high quality person, what would I seek in a job?
Right.
And I think that's a great tip. So let's talk about your business partner, right? Typically, business partners that work really well together have very complementary set of skills and not similar set of skills, right? So is that the case with your business partner? And how do you guys complement each other?
We have a lot of overlap. There's no doubt we have a lot of overlap. He's always on time and he's more detail oriented than me. Never on time, and I'm a little more loosey-goosey on the details. So those are some of the things that, number one, are skills that we bring to the table that are different, and number two, can grate on each other a little bit. But what we did is, I think skill-wise, we're both similar. But what we did is we said, hey, I'm going to pick this lane and you're going to pick this lane. And when I brought him in, I said, I know you have more talent than I'm going to ask you to utilize, but for the time being, I really need you to focus on one segment of the business and take ownership of it. And I kind of get out of his way and I let him run it, and we check in with each other. But at the same time, I don't get in his way because he's competent. So, and then he doesn't get in my way on the things I'm good at because we made an agreement that, it's best for the whole of the business. And Daniel, the business, he's been with me for 18 months and the business is like almost tripled in a year because I have a talented person who's committed and we respect each other and we work hard together, and that's it.
Well, I've seen your growth. So I remember having drinks with you like a year ago, and I think you were at 60 rentals, and then I talked to you less than 12 months later and you're close to 200.
Yeah.
Right. So, I mean, you've been, I've personally sort of witnessed your growth. So let's talk about that, because let's talk about what your business looks like in terms of, you clearly have a massive acquisition pipeline, and what you're able to do is what I think is really smart, right? Because you're not just wholesaling deals. You've got a massive pipeline, you're spending a lot of money on marketing, but then you're able to wholesale deals, you're able to cherry pick deals to fix and flip, and you're able to buy rentals.
Right.
So you've got the ability to sort of take as many good leads as are coming your way and figure out the optimal exit strategy for them, and you've got the financing to do them, which I think is smart, because a lot of people just focus on wholesaling and they're probably missing out on a lot of the bigger profits that you're seeing because they're having to wholesale those deals instead of being able to take them down and flip them or hold them, right? So what is that, what percentages would you say, like how much of your business is wholesaling, how much of your business is fix and flips, new construction, and then how much are you focusing on rentals right now?
So last year we did 212 deals. Of the 212, we bought and held more than 115. And then we wholesaled and flipped about 40 each. So if you look at it from that perspective, we actually held almost 65% of our inventory. We ran the business on 35%. Now, that's stressful. It screws up cash flow. I certainly could probably afford a nicer car had I flipped all 200 of those deals. But what I've done instead is I said, you know what I'm going to do is I'm going to use the fix and flips and the wholesales to run the business, attract talent, and give me the banking requirements I need to be able to build my rental portfolio. And what I notice, I'm well networked inside of this space nationally. You know this. And so the people who have the most money are the ones that aren't traders. Buy a house, flip a house. Buy a house, flip a house.
I've been preaching this for like 10 years. 10 years. Right. The people that make actual wealth in real estate are owners.
Yes.
They're owners. They're not wholesalers. They're not flippers. They're always owners.
So we use the wholesales and we use the fix and flips. as the cash we need to grow rentals. And kind of like how you've grown your portfolio, like you need to be able to keep the lights on. So you need to have, you know, incoming cash. You need to make profits.
You need something that generates the equity, right? You need something in your business, whether that's wholesaling, fix and flipping, or something else that generates the equity.
No matter what business you're in, there's always a core component that actually generates monthly revenue. And then you take the monthly revenue, you can either spend it on trips to Vegas, or what you can do is you can invest it. You can say, you know what, I'll go to Vegas once a year instead of 10 times a year, or I won't stay in the Daniel Clayman suite.
Twice a year.
Yeah.
Not 10. 10 is crazy. Don't get crazy. All right.
That's parallel with Mandalay Bay sign. You know, you can say, but the moral of the story is if you're prudent about your business and you build a business that suits you and serves you, you have to have some fundamental disciplines. You need to take it on the chin for a couple of years. Instead of making $1 million, maybe you make $250, and you say, you know what I want to do? I'll take this smaller salary, but I'll reinvest for later, and I'll hold on to these assets, and the assets start to appreciate.
I couldn't agree more. We actually did the training for our inner circle a couple of weeks ago, where I walked people through sort of the 3 cycles of money, right? And anything that comes in as income doesn't get spent. One-time income gets reinvested into recurring income. Right. And that's how you stay disciplined. What everybody is doing is they're taking that one-time income from wholesaling, fixing and flipping their job, and they're spending everything, and so it leaves the cycle. So I couldn't agree more with what you're saying. You've got to be disciplined about the income and where that income goes. Stop buying shit that you don't need, reinvest it into recurring money. Then you can take the recurring income and spend it on trips to Vegas, and you don't, you know, you can go to Vegas 10 times when you're getting enough portfolio income. Yeah.
So it's easier for us to say this now because we're at a point where we can say it and we believe it. So I don't know your listener base as intimately as you. So I would tell you is if you're just doing your first couple of deals and I'm not trying to say be guilty over the fact that you're making money. And if you have high interest credit card debt or like there is a prudency to getting your fiscal house in order. So do that first and make the money. But then what you start to do is if you can start to hold 1 out of 10 deals and if you start to 2 out of 10 deals, it's progressive. Like in the very beginning of this interview, you asked me about like how long I've been doing it. I mean, I've been in full-time business for 9 years. And what started to happen is we're starting to exponentially grow our rental base because we can. We have the assets, we have the liquidity, we have the relationships. But it started with 1 rental. And then 1 rental became 2 rentals. And it slowly builds. But if you're prudent to that, you can then, a lot of fiscal discipline year over year over year becomes an exponential difference over time. And I mean, if you've read anything that Warren Buffett has ever said or written, all he talks about is the 8th miracle of the world is compounded interest.
It's a snowball effect, right? So I think his book is actually called The Snowball Effect, and it talks about the compound interest, right? And again, and that's why we also always preach, you know, you earn 10 grand, don't spend it. Right? Reinvest it back into the business, reinvest it back into marketing, or if you can, reinvest it back into something that generates recurring income. And then that 10 grand is going to work for you perpetually instead of being spent on the fucking Cadillac or whatever else it is you want to spend money on. And a lot of people don't necessarily get that, right? Like
the other thing of it is too, is for a lot of people that don't get it, most people that don't get it don't feel like they have the money to do it. So what you have to realize is you're already living through pain. If you're worried about paying bills every month and you're stressed out about fiscal things, it's never going to get any better. Like $100,000 wholesale deal is not going to change your life that drastically. 15 of them might in a month, but like if there's, so what you start to realize is I'm better off just taking a small dose of medicine now and simply just holding back on this 1 deal and then continuing to let them go. So like for a normal, smaller investor that might do 25 deals a year, hold on to 1. Like what's your average wholesale fee? 10 grand? Live without that 10 grand and just hold on to 1 this year and see if you can do 2 next year. And by the end of the decade, you're gonna have 50. You won't have so it starts to grow.
Absolutely. Yeah. So let's backtrack a little bit. I think from knowing my audience, everybody's biggest pain point right now is deal sourcing. That's what everybody bitches about. It's 2018, and I would venture to say that most wholesalers are struggling. Most people that don't have their own deal pipeline, that rely on other wholesalers to bring them deals, are seeing less deal flow. I think that's a pretty sort of common problem across the country. You're still able to source deals regularly, cheap deals. You told me about a wholesale fee that you made on a deal you sold on Monday, and I hate you because clearly you bought that deal dirt cheap. So what's your secret? Are you just sending out a massive amount of direct mail?
That's not the answer, and you know it though. But we send out a lot of mail. We do a lot of marketing. So in our business, we are a direct-to-seller marketing business, right? We do almost 60,000 touches per month in our market. Plus, we do PPC, which is online pay-per-click advertising, right? We usually rank 1.6 in Google, which if you don't speak PPC, that means at the top of the page, we're usually 1, 2, or 3 before it turns into ads, and we're up there. So all that stuff is important. But the other thing we do is I have 3 people on staff whose entire job is to buy houses. It's their job. Their job is to go out, meet with homeowners, solve the homeowner's need, and satisfy whatever need it is that allows that homeowner to sell us their home. That's it. So they don't make a paycheck unless they get deals. So it's my responsibility to give them opportunity, and it's up to them to go satisfy that opportunity and make a living. So it all comes down to having a plan, sticking with the plan, and then having people that can help you execute the plan. And if you and your wife are doing this business together, one of you is going to be doing that for a while. And that's how I started, was literally just going directly to the sellers. But there's no magic bullet. There's no magic list. Like last year, we sent out 600,000 direct mail pieces. 600,000. Probably 700,000. I'll call it 700,000. And we did 200 deals. 700,000 direct mail pieces means that I was wrong 69,800 times. Like someone didn't call me, someone didn't do a deal. So it's like you think there's like a magic formula. The magic formula is don't freaking stop. And
consistency.
Follow up. Yeah. And you have to continue to follow up. People's needs might change. You might present them with an offer like, you're full of crap, I can't take that offer. So then they go and they put it on the MLS, and 7 months later it still isn't sold. And you're like, look, I told you it's worth $105,000. You're selling it for $250,000. I'm still willing to buy it for $105,000. And then they go, you know what? I'll sell it to you, because we just service the market. So you have to do that.
So you guys have an efficient and consistent marketing and follow-up process, and you're right, there is no magic bullet. Right now, you need a bankroll to be doing that kind of marketing, but again, it snowballs. You do some deals, you reinvest it back into marketing, now you can afford to do more marketing. What I see a lot of people do is they'll test a list, right? They get excited about a new list or a new lead source, they test it, they send out a mailing, they get 0 response rate, and then they just give up, right? And they go on to something else. And you got to hit them again. You got to be consistent.
You must. And so I sent out 60, let's just call it 60,000 pieces a month. I didn't start doing that my first day in business, right? And so if you're listening to this, my guess is you probably send out less than 60,000 pieces a month. But there are people I know that send out 250,000 pieces.
Can I just interrupt you and point out that out of those 60,000 pieces every month, like 90, 95 go to me, to the same mailbox?
I told you to tell me your entity. You're like, no, man, I want to control the information. I want to know what you're doing.
Yeah, I get a lot of your mail, so I know how much you're mailing. It's good.
Yeah, a lot. But the perspective is this. I teach a meetup. It's free. If you're in Richmond, you want to come. It's free. I teach it almost once a month. invariably, somewhere between 25 and 50 people show up every month. I asked, by a show of hands, who's spending at least $1,000 a month in marketing? And out of the, let's just call it 50 people, my hand included, less than 5 people are spending $1,000 a month in marketing.
Wow. I'm surprised. I figured it'd be more than that locally.
Not the people that come to my meetup. I mean, maybe there are people in the marketplace, but literally even people who do a lot of deals, names that you probably know, smaller time wholesalers that do, 2-3 deals a month, they don't even pay $1,000. So if deal flow is the most important thing in your business and you don't have deal flow, here's what I'm going to tell you to do. Stop doing every fucking thing else and focus on deals. That's it. Stop everything. Set up 15 meetings a day with people who have inventory and go pound them until you get a deal. And then keep doing it and keep doing it and keep doing it and keep doing it until you get enough deals where deals is no longer the problem. Then you're going to have to transition to selling it. So then you're either going to have to, like, if you're pounding in for deals and you find deals, well, then start finding your buyers and then keep going through that process. And people think that they're doing everything, but you're not. Like, if you're going to see The Force Awakens or The Last Jedi at 2 PM, you're not working hard enough and you're making excuses. And
or people are doing the wrong things. So I think people get overwhelmed. They say, well, for me to have a wholesaling business, I have to have this LLC. I need to go find an attorney. No, like you need 2 things. You need sellers and you need buyers. And you'd probably agree that buyers are a shitload easier to find right now than sellers. Like, you have no trouble selling your deals.
No.
0. So
there's a couple of ways to tell this story, right? I was driving around the other day and I saw a sign up on a telephone pole that said "Stop Foreclosure." Okay, kudos for putting up a sign. Wrong message. Like, that was a great message to put up in 2008. So if you go and buy REO Rockstar and you listen to that and you go put it out there and you put it on a bunch of telephone poles, it's the wrong message because the market has shifted. Back then, like 12% of real estate was in foreclosure. Now it's less than 1%. So what you need to do is you need to actually write a message that the market wants to hear. That's number one.
Absolutely.
So if you are struggling to find inventory, my guess is you don't have the right message. So go out to every freaking meetup or info session inside of the market and say, who are the sellers? Who are you finding? Don't ask, what are you advertising? Because that's lazy. Find out what's the need behind the need. The need behind the need is usually somebody who has some level of distress fiscally. It's usually someone who's inherited a house. The simplest term is we buy houses, right? Because then you're not precluding anyone from calling you. Right. What if I have a house to sell and I saw a sign that says we buy foreclosures? Well, I'm not in foreclosure. I'm not going to call him. So be a prudent advertiser. Number one, find out what the market is going on around you. What is current? Like, you and I, Daniel, can see the market. Like, we're in this every single day. We're pros. I can tell you the state of the market. I can tell you the sellers. I can tell you the neighborhoods. But I've been doing this every single day for a decade. If you're relatively new to this, you don't have that ability. So you need to inundate yourself with information so you understand it. And then you have the right voice to connect with the market.
Figure out who your prospects are and then figure out what messaging your prospects want to hear. I mean, that goes, and again, I couldn't agree more. That's almost every job position within real estate that we have is in some way marketing, is in some way sales. I mean, if your goal is to attract sellers, that's your prospect. You need to figure out what your prospect wants to hear. I couldn't agree more. Now, have you been picking up a bunch of stuff from, or I should say, have you been picking up more stuff lately from landlords? From kind of landlords that are tired of managing their properties, out-of-state landlords? Has that become a bigger part of your sort of deal sourcing lately, or no?
It's constant. That's always been part of it. But so it's 2018, right? Most people who are landlords are, I got a statistic written down in the book over here, but if you look at the real estate in the entire United States, anything that's a rental, 90% of every single, and this includes all Wall Street stats, and this is like a fourth quarter 17 stat, so it's current. 90% of every rental in America is owned by someone who owns a primary residence and one more house. So in most instances, they're accidental landlords, or they have a beach house, but in most instances, they're accidental landlords.
Or they inherited, or maybe they upgraded houses and just kept the old one as a rental. Yeah.
Right. But so what I'm saying is accidental in that we're saying the same thing. We're just picking terminology, right? So in almost every instances, there's that. So if you look at it from that perspective, we've been an unbelievable run in real estate. So like 04, 05, 06, 07, it shoots down. But somewhere around 9, 10, 11, depending on what market you're in, it was starting to come up. It's 18. So there's been a 10-year run up roughly in real estate. So people who've owned one home that wasn't their primary residence, now is a good time for them to sell because they owned it for a long time. So it's a target-rich environment. But the same thing happen with people that are 30, 40, 50, 200 units deep. They also look at it and they say, if you own 200 how many single-family rentals do you own?
I mean, between my duplexes and commercial and stuff, I'm at around 100 units.
All right. 100 units is a massive pain in the ass to manage if it's not in one location. Am I wrong?
Yeah. Well, again, for us, it's not because I have a full-time property management staff, but for most, if you're an accidental landlord and you've accumulated that many, yeah, it's a freaking nightmare.
But if you own one commercial building with 100 tenants, or if you own 100 single families spread around the entire city, which is easier to manage?
One property, one location.
So people who've amassed 100, 25, 50, 100, if they've owned them for a handful of years, at least 10, they have a ton of they have a ton of equity if they haven't spent it all, right? Going to Vegas 12 times a year. So so those are people who are ripe. There are 1031 exchanges, so they can take that house or sell the whole portfolio and then trade up to 3 or 4 large buildings, which is easier to manage. So there's a brain damage component to single families. So we talk to all kinds of people. And one of the things that we're starting to target is portfolio owners with 25 plus units, because I can buy it, I can fund it, I can then pull the portfolio apart. And inside of it, I might have 6 equity deals. So there's enough juice in those 6 where I could sell those and then basically have enough equity in the entire portfolio where I could take it to a bank and they'll giggle and give you money to fund it. So it changes things. I speak in English to a group.
You're speaking English, and I know exactly what you're talking about. And that goes back to sort of what I pointed out earlier, which is you have a unique ability to take a portfolio or just to take your entire deal pipeline and figure out the best exit strategy for specific deals and cherry pick, right? So you're doing that now with the portfolio. You and I, before we started recording this, we were talking about portfolio that you're taking down right now, where you're going to wholesale some deals, you're going to fix and flip some others, right? And you're going to carry the rest of them.
Yeah. And so let's do this. If you do 1 deal or you do 200 deals or 2,000 deals, you need to be prudent and look at every single deal. So what we do in our office on Monday is we have an acquisitions meeting, and that meeting is frankly it's a pain in the ass. It is a time-consuming. It's a slog. It is like a grind. So we show up at 9 o'clock. Everybody meets with the whole team. They get all their information from the past week written on paper, and then at 10 o'clock I walk into the room and we go over every single lead, someone we've had an appointment with, anything that's a prospect, or anything that's under contract. And we analyze every single freaking deal. Every Monday. Now, if I'm traveling or if I have something else going on, I'll skip them. But in a 52-week year, 45 times a year. And what we do is we look at every single freaking deal. And the reason for it is we look at it and say, okay, what's the best use of this house? Like, all right, we can buy this house and sell it on the open market and make 50 grand as a wholesale fee. We're going to take the 50 grand. But then with that 50 grand, now we don't pick where the money's going to go. But what I analyze is I've got buy boxes for everything. Like, this is what a wholesale looks like. This is what a rental looks like. This is what a fix and flip looks like. And we pace it out. And what you start to notice is if you're struggling for deal flow, like all you give a shit about is getting the deal and collecting a check. Like, we've all been there. There's no shame in it. I get it. But eventually what you'll get to is you'll look at it and you'll start to say, okay, what's the best thing to do with this house? So Church Hill, for example, right? You and I both know it's a small neighborhood. I mean, 5 years ago, you didn't want to be there after dark with your mom because you're afraid you would have gotten shot. Now, cute petite women are jogging with baby strollers. Like, it's completely different. But if you can find a neighborhood that's 5 years ago Churchill, and you can hold that one because it's got good fundamentals today, in 5 years you might sell it, make 120 grand. So what we look at is, okay, this is in a pocket where we want to hold, or this is a deal where there's enough juice in it where we can get it long-term financed and we can turn it into a rental. Or you know what, someone's going to pay us 50 grand. 50 grand. My mom was a school teacher when she retired last year. She made 62 grand a year when she retired. If you can make my mom,
before taxes.
Right. If you can make my mom's entire salary with one deal, take the money.
Yeah.
So don't be a pig. Don't say, oh, we can make 65,000 if we flip it. Like, screw that.
Take the 50. Yeah.
Right. And then we have a formula, Daniel. If we can make 40% of the amount of money we can, if we bought a house, fixed it, and sold it as a fix and flip, if we can make 40% of that money right now as a wholesale, we'll take the wholesale.
Interesting. So if you can make 40% of the money you would make now, yeah, no, that makes sense. If you can make 40% of the money you would make fixing and flipping, if you can make that 40% as a wholesale fee, you take the wholesale fee. Yeah,
that's it.
That's smart. And you're figuring in all your financing costs into that equation, everything.
Yeah, I don't have a fancy deal calculator like you got. I just have an Excel spreadsheet.
Where have you been, man? Come on.
I can't afford the subscription fee. But we have a formula. We use it. We look at it and we study the numbers and we say, okay, this deal pro forma is out like this. Like last year, our average fix and flip was just under 50 grand, and our average wholesale fee, you can do the math, was just over 20, almost 40% of our fix and flip fee.
Are you making more in your new construction than your fix and flips?
It all comes down to lot purchase price.
Yeah.
In some instances, yes. In some instances, no. But you got to realize a new build takes longer than a fix and flip in most instances, and you need to be fiscally capitalized in a different way for a new build than you do for a fix and flip. So we prudently look at each deal, we model it financially, and we say, what should we do?
So let's talk about then the other component, right? The financing. So you're using private lenders, you're using banks as well?
Oh, yeah.
Yeah.
So most of the people we compete against in this market, literally like 15 of them all worked at Verizon selling cell phones. I don't know if you've looked at that statistic, but it's the truth. So
wholesalers?
Yeah. Like the biggest names in our space for fix and flip, they all worked at Verizon. Most of them together.
Oh, at one point back in the day.
6, 7, 8, 9, 10 years ago, when you were on Wall Street, when I was working for corporate America.
I did not know that.
Yeah, ask like 3 or 4 of the wholesalers or the fix and flippers that you know by name. They all worked at Verizon. Okay, so they were selling razors and flip phones and shit like that. So most of them didn't have any money. So they get into the space with no money, and then they go out and they get abused for finance. You and you had a finance background. I worked for a publicly traded builder, so I started with a little bit of money, okay? So what I did is at first, I just used just my money. I didn't have like millions. I had some money, but I had enough money to go buy 1 house in cash or 2 houses in cash. So what I did is, number one, I started that way with my own cash. Once I had a compelling dialogue and I had a success record, and it wasn't like 100 houses, I think it was like 3. I went to a local bank and I said, hey, look, I've got X number of dollars. It was more than 100 grand. I'm willing to give you my money in the form of deposits if you give me a loan. And I would like to build a structure where if I see a house, I can use some of my money and some of your money to buy it. I'm going to fix it and I'm going to sell it. That's how a relationship starts. It starts with a conversation with someone in a bank. Now, if you go to Wells Fargo or Bank of America or any of the big banks that have like ads on the Super Bowl, you want to go to small community banks that have a commercial division. And you go talk to someone in the commercial banking division, you talk to them, they start to like you. It takes 3, 4, 6 months, but over time, they'll eventually give you a line, especially if you give them enough deposits. And then what I did is I had my own cash and I had bank money. But banks are a pain in the ass. They're slow. It requires appraisals. There's draws. So you can look at it from the standpoint of you can either do more work, or what I do is I say the net effective cost of money from a bank is higher than the 5% interest. It's usually closer to 8.5%, 9% because of the staff it requires, because of the time that it requires. So I went out and I just found private people.
You're saying your cost of money is higher than 5%? Your net cost?
I'm saying that if you use a bank with the fact that you can't get 100% finance because of the fact that staff person, like even though the bank has a really attractive interest rate of 5%, 5.5%, by the time you factor in the fact that you've got to use your own capital and then you need staff, so the net effect of capital, I think, is closer to 8.5%.
So just to be clear, you're looking at the cash that you have to supplement the bank loan with, and you're looking at the opportunity cost of using that cash somewhere else, and that's how you factor in your cost of money, essentially?
And one more person's time to do the work.
Okay.
So like if you have a $50,000 a year employee that's dealing with all your bank relationships, that needs to get factored in the amount of money you're borrowing.
Okay, that's smart. It does, yeah.
So that's how I looked at it. I said my own numbers. Now, again, I went to a state school in Florida. I did not go to UVA like him.
Frank, you're one of the smartest guys I know, and I love how analytical you are about this business. I mean, again, you approach real estate, and I think people watching this by now can tell that you approach real estate in a much more top-down, analytical, intelligent way than most. And I think that's what's allowed you to grow and make smart decisions. So,
I hope. But what I did is I just basically did a napkin conversion and looked at it and said, this is about what it costs. So then I went out to private people who would literally just give me the entire amount I needed, and I pitched them at like 12%. And I did a handful of deals at 12%, and I whittled them down to 11, and I whittled them down to 10, and then I whittled them down to 9, and then I whittled them down to 8.
And now they're paying you. No, I'm just kidding.
No, not quite. But I can get private money now between 8 and 9% in market.
Short-term money, long-term money.
Like deal money. So 6 to 12 month notes.
Okay, no points.
0 points.
Okay, and they're financing 100% of your deal.
So I bring them a deal. Let's just make the math easy. I buy a house for 100 grand. I'm going to put 100 grand into it. It's going to sell for 300 grand. Now you do realize I've done 200-300 loans with these people. So they know me. They come to my office. They get to my home. They know me. They trust me. If there's ever any, if they want to see my bank statements, I just fax it to, I scan it and send it to them.
Yeah.
Like we've got a relationship where they know more about my finances than my mother does. But yeah, they will give me money at a great rate, and they give me all of it. So it's easy and it's quick and it's fast. And I don't have to hire a full-time person just to do bank relationships. So that's how it goes. So I mentioned in my meetup, people always come in and they're like, I need to raise money. I'm like, all right, well, good luck. If you need to raise money, you can't come out and say it.
Yeah.
What you need to do is you need to talk to people educatedly about what it is that you do inside of your business, and you need to tell a compelling story. So if people are looking to raise funds in this phone call, here's what I do. I explain my business. People invariably will ask me what I do. I have constructs and I have kind of parameters, but it's not fully memorized. But this is what I say. I was like, I do direct to seller marketing and I buy homes at a discount of value. What we do with those is we have 3 exits. We buy it, we fix it and sell it like they do on TV. We make a really pretty shiny house. We get it under contract. We sell it to another investor in our marketplace that doesn't have the same marketing channels as us. Or what we do is we buy it, we fix it, and then we turn it into a long-term rental and we put a family into that house. Over the past 9 years, I've done more than 1,000 deals. We've lost money on a couple, but by and large, we make good money. Every single loan we've ever had, we've paid back our investor 100% of the money they were owed on time and when we promised them. And over the course of time, it's been a really good business for us. And I shut up. And if someone's interested in investing, whether it be your mother, your father, your uncle, or someone you met at Starbucks, you gave them enough inside of that to say, you know what? This is a compelling argument. This is an interesting story. And it's just like dating. They'll be like, not interested. I'll take a venting cap. That's not an investor. Oh, tell me more. Then you got something.
But you're not running up to these people and saying, I've got a deal I need to close on in 3 days. Give me a loan. You're
not desperate.
There's a big difference.
Yeah, people with money don't want to lend to desperate people. They want to lend to people who sound educated. Like
say that again, because again, this is something that that we teach and preach all the time. It's that mental shift, right? I mean, you need to be approaching this business from a position of power. You have a unique skill set, and you're bringing opportunities to people. You're not begging them for money.
No. The stock market is on a stupid run, like a stupid run. And the people I talk to that understand the stock market think it's going to run more. So most people who are fiscally prudent are making good money on their money because they're active in equities and stock. So it is what it is. But what I do is I tell people a compelling story. Every single person thinks they can do what we do because every single person lives in a home. Now, they might not own the home. It might be a rental, but like my wife speaks Spanish. I can never criticize or give feedback on her business because it's in a language I don't understand. I'm like, well done. My wife has never owned her own home. She's never paid a mortgage. She's never been a pro in real estate, but she has an opinion about real estate because she's lived in a house ever since she was born. So everybody thinks they're an expert in this space. But the other side of it is if you're selling real estate, you need capital in real estate. You're not selling derivatives or you're not selling atoms that people can't see. It's a house. Because of HPV, everyone's in love with houses. Yep. So if you want to raise capital, put together a flyer with 5 houses or 2 houses, or you've only done 1 house, fine. Put 1 house on a piece of paper and then show it to them and say, here's what I bought it for. Here's what I sold it for. Here's what I made. I need a bank. And then you just talk. And what will most likely happen at first is it's going to come from a circle of influence. And then eventually what happens is your circle of influence gets larger, or so-and-so's got 100 grand, but they know someone with 10 million. And you end up talking to that person and you're like, oh, Frank, it's so easy for you. It wasn't. I started off having to fundraise every single day the way that I told you to go and get deal flow. Like I was doing a banker presentation 7 times a week. And I mean, I have a presentation now, Daniel. I literally sit in front of bankers quarterly, probably 15 bankers a quarter, and I pitch. And I do it because I'm growing and I need capital. So I go out and I talk to them, and it's slow. Like someone's not going to just give you 25 million bucks. They're going to start off with 100 grand, and you got to just grow the relationship.
You gotta be consistent. Yeah, and every relationship needs maintenance. It's like a flower that needs watering. And then, even with private lenders, that same person that may tell you they have 100 grand to invest, that first time you successfully pay them back and do what you said you were going to do, it may turn out they have $1 million to invest, right?
The meeting I was in before this call was with my largest private banker. And my relationship with him started on one $200,000 loan. I'm up to over 9 million with him. It's a good relationship.
That's a very good relationship. So how are you financing your rentals? Are you getting long-term private money, or are you refinancing everything with local banks?
So what I do is I usually use my money and private money to buy it. We renovate it. And then once we lease it and have it improved, we have a local bank come out, do an appraisal, and then they give me parameters. And if it fits within those parameters, they take it out.
Are you doing portfolio?
Finance it.
Right, they refinance. Are you doing portfolio loans? Or are you doing not portfolio? Yeah, portfolio blanket loans. Or are you doing one by one?
Both. Every bank is different. I mean, I have a different banker than you with the same bank. You and I have talked about this. I've got individual deals with them. I've got they're in the process of putting together a really large line for me now. I've got 3 other local banks that I work with. I've got a couple of national banks. A bank that I work with just got purchased by Goldman Sachs 2 weeks ago. So I'm working on a deal with them. So it's the highest and best use of my time now is basically 4 things. Just like everyone else in my business, I do 4 things. I run the business, number 1. Number 2, and in running business, I set the vision, I set the tone, and I run the business. Number 2, I'm in charge of keeping our current staff in line and keeping them on task. Now, I've got different people that manage each segment, but that's what I spend a lot of time on. I work on hiring new talent, and I work on finding money. And then everything else inside the business fits into those 4 buckets. And then when I start getting a little bit out of skew or I need some help, I either add someone to help me, or I'll say, you know what, I need to take this off my plate to focus more time on this. It's very organic. You start looking at what are the things you're spending your time on? What are the 4 or 5 things I'm doing every day that help move the needle the most? Well, I need to focus on those. Like, I don't want to do email. Fucking sick of it. Like, it makes me no money. Someone else can do that. And that's what we're working on. Like you need me as people who work here to be talking to realtors, bankers, investors,
high level relationships. Yeah, that's your job is to work in the big picture, work on the business, and not in the business. Absolutely.
But at the same time, but when I started this business 9 years ago, who I needed to network with was very different. I needed to network with someone who wanted to sell a freaking house. Then I needed to network with someone who would buy the freaking house and pay me a check in the middle. Like, that was the highest and best use of my time. I've graduated. I have people who do that for me. I hold them accountable and make sure they're doing a good job. And then I continue to push the needle that way.
Yeah, no, it's great. What's your long-term vision for your business?
It's hard to share that. So what we like to do is we like to continue to buy assets. That's the number one driver, is to continue to own assets. And the reason I say that, Daniel, is because if the market goes to hell in a handbasket, it's going to let me and my family continue to live comfortable. So asset acquisition at the right numbers is huge. And then further past that, it's I like employing people. I like giving people a good place to work. So I like to grow a business. And those are the things that I'm passionate about. So if you find good, talented people and you give them a place that they want to work, ultimately what ends up happening is we satisfy our first need and want, which is to grow our real estate assets.
I like it. Speaking of market going to hell in a handbasket, you mentioned earlier something that I've kind of been saying over the last couple of months, and that is that we're in year 8, year 9 of a market expansion, of just an economic expansion, and it's traditionally an 8-year cycle. So how much longer do you see this continuing and then do you see a correction happening? Do you see a recession happening? You look at this stuff, like I said, more than most people, right? At the macro picture. And I think a lot of investors are so stuck in just the one deal that they're doing. They're not really looking at the big picture. So guys like us that have larger portfolios and larger businesses, if we don't think about that stuff, we're gonna get sideswiped at some point.
There's no doubt. So you speak finance more than me. We're in what's called a long tail recovery, which just means it probably should end soon. Or we should have some level of a correction. So you go all the way back to how I started this business. I didn't start this business by buying a plot of land and building a speculative home on it. I started this business at a time when real estate was a falling knife, and I went into a proven entity. I go into a community with 200 or 1,000 residents. In some instances, they had like a swimming pool and an exercise center, right? And I would go in there and I'd buy one crappy looking house off the MLS. I'd fix it and I'd sold it. And the beauty of that is real estate was a falling knife, but I could hedge my bets because I knew that if I made it better, well, people wanted to live there. It was an easy exit. So that was my first transition into the market. So what I started to learn over time, the way that I set up my business is I built my business for the next downturn, not for all the boom years. Most of the people that I talked about earlier that are in our market that worked for Verizon, they're paying 16% for their money. It takes them 2 years to finish a house, and they're basically just trading on the draw. What we're set up to do is the opposite. We are currently working on debt elimination. We're working on furtherance of asset value. And what we're trying to do long term is we're trying to build a cash cushion and a income cushion every single month that allows us to weather any storm. And if you have interest, or you have a ton of money in credit card debt and you're trying to quit a crappy job, you're in a very different spot. Like, what you need to do is you need to be able to replace your current income. You need to get rid of all those high dollar debts. That's the first thing. But when you get to a point where you've gotten through that storm, what you want to look at is how do you fortify yourself? How I fortified myself, how I know you fortified yourself, is you've got a couple of streams of business. I have a couple of streams of business. The stream of business that I'm most interested in growing is a stream of business that pays me every month, that has a rentals. So what I look at is if the market changes, we buy with enough equity where if the market shifts, we can get out quickly. And then we are continuing to try and grow cash and continuing to try and grow our asset pool that can pay us over time.
And I couldn't agree more. And the asset pool more specifically is working class rentals. Essentially, you're not focused on class A luxury rentals. You're not focused necessarily on sort of class D stuff. You have nicely fixed up rentals, but you rent them to working class people that will continue needing a place to live even if there is a recession. That's your fortification essentially.
So if you want me to get real specific, on the flip side, we service a first-time discretionary or a first-time discretionary move-up buyer. In English, what that means is if you're going to relate this to a car, we sell houses to people that buy 3 Series BMWs. They don't buy Hyundais, they don't buy Toyotas, they buy 3 Series. And the reason is, on this house selling side, they're easier to qualify. They usually have a little bit of money. They have better credit. It's an easier sale. The other thing, that particular market, because of the millennials that we have and because of the inventory that we have in Richmond, most of the inventory we have in Richmond, you and I fix and flip houses that are next to each other. I flipped one across the street from where you used to live. Like these are 60 to 100-year-old homes, right? The best way to do those is build them and price them for a high 20s, low 30s type of a buyer who's either moving out of an apartment, a condo that they may have owned, or they want to be in a place with walkability. So there's tons of those neighborhoods where we live and they're an affordable band and they happen to service that. So what we do is we actually fly lower than some of the other people who pound their chest and say they're the best in the market. What we do is we provide a price point buy in there for someone who has the ability to pick and choose what they want. So we'll sell for $350 to $400 grand, where other people are trying to push the market to $450 or $5. But I'm cool with that. We provide a good house. People are interested in it. People will buy it. If the market is great, they will buy it. If the market is not as great, they will still buy it because they need a place to live. Conversely, on our rentals, we don't target tenants like you and I, because you and I are pains in the asses. We are highly demanding. We know what we want. We are going to make you give us what we want.
Not me. I'm great.
You're full. Not only are you full of shit, but we are not the people that we want to rent to. We want to rent to people who are in need of shelter. So what we do in a lot of instances is we go into maybe C neighborhoods. Now, they're not crime-ridden neighborhoods, but they're not the most amazing neighborhoods in some instances. And what we do is we take an old home and we give it a new roof, new windows, new HVAC, new electric, new plumbing. And then we take all of the fit and finish and we completely and totally make it so someone is moving into a fully renovated house. And in a lot of instances, we rent through Section 8. People that are in the Section 8 program need shelter, okay? So what we do is we find someone who's a good tenant, who may have lived in an older home that was forgotten about and not maintained. And then I have a lot of pride in the house I live in. I've been to your home. You have pride in your house, right? You're raising your family in that home. Well, people who rent also have pride. It's called pride of rentership. We tap into that pride of rentership. We give them a house that they're excited to show their friends, and then they keep it in good shape. The other thing is they don't move. If you are an owner of rentals and you turnover and maintenance are the two things that kill you. So if you keep a tenant in place, you give them a new house, they live in it for 8 years without moving. 93% of our rentals renew year over year. It's amazing.
How many percent? 93. That's really high. And you and I do serve a different target market with our rentals. So 93% is great. I mean, I'm more into kind of higher end stuff. I still have a few Section 8, but most of our stuff is, what we call like luxury rentals. Our turnover is higher, but I completely agree with you. I mean, in your rental portfolio, turnover is the number one thing that's going to kill you. That's the number one source of stress. It's the number one cost of money. It's the number one cost of having to have a staff, leasing, maintenance, repairs. So if your turnover is 93%,
my turnover
Or I mean, yeah, your turnover is 7%. That may be the best number I've ever heard from anyone. You and I have a friend in common. We won't name him on this call, but you know who I'm talking about. He rents to students, and his turnover is like 90% every year.
Because he gets good rents, and he gets good rents in expensive neighborhoods. But at the same time, he's basically doing student housing, and student housing has a higher wear and tear factor, and these people are moving out. Now, I think he has a very secure business. He's renting places that students can walk to campus. So he's in good A neighborhoods, and he's renting to students. There's a business. What I'm doing, Daniel, is you asked me where I think we are in the cycle. I think we got some room left in the cycle, but what I'm trying to set myself up for is my fix and flips are built in order to capitalize on the market. And I sell to a segment of the market because of millennials and where they're buying. They're going to be there for another 15 years. So that's number one. On the rental side, I rent to people who need shelter. Shelter is a human need. You cannot live under a bridge for that long. It's not sustainable. So you need a place to go. I give people that need a place to go that they're actually happy about, they don't move from. And then the other part of my business is the wholesale side. Right now, wholesale and fix and flip are about 50-50. They're neck and neck. When people are starting to overpay for inventory, which the time is going to come, it's going to get stupider before it gets into a recession.
It's already here.
It is, but it's going to get crazier. We're starting to sell those, and we're starting to sell those, and we're starting to sell those. And we're being prudent.
So you have an opportunistic side to your business, right? And it's the same way that I've approached my business. I don't do anywhere near as many fix and flips as you do, but for me, fix and flips and new construction retail sales have been purely opportunistic because that's what the market allows now. But I'm fully prepared to not do those if the market turns south because I have a rental portfolio that's going to keep me afloat, essentially.
Right. Yeah.
So yeah, it's a very smart approach, and you're smart to realize that this shit is going to end at some point. We may not see 2008, but we're going to level out.
Yes.
You know, anybody that thinks otherwise just needs to look at history. I mean, we're going to see a correction, and it's statistically speaking, it's overdue. You could argue we're past that point, statistically speaking, where we should have seen a correction already, and you could attribute that to the current political climate, who's in office, whatever, however else you want to explain it, right? But I mean, you know, the stock market is at an all-time high, but you know. Real estate way beyond 2008. We're above those price points in most markets, above the peak from 2007, 2008. And you've got some stuff in the economy that's kind of concerning, right? Student loans, car loans,
right?
Your 3 out of 4 of your next door neighbors investing in Bitcoin. I mean, like some bad shit is going to happen in the next couple of years. How bad? I don't know. I'm not an economist.
So let me explain something that I think that the listeners, if they're still listening, will appreciate. The economy is important, but your economy is a hell of a lot more important. Like in a recession, in a depression, there are people who actually grew businesses and made money. And the only people you really hear about on the sob story side of that are the people who lost their houses. You hear about the Dust Bowl and people moving across the country. I mean, they're compelling John Steinbeck-esque stories. My goal is never to be the subject of one of those stories. And the way that I do it is I hedge by owning things that will pay me. And I get up every day and I try and add to that base. And if you are, no matter where you are in the cycle, if you're brand freaking new and this is the first podcast you've ever listened to, or you've been doing this for 25 years, if you continue to work every day to provide a valuable service that the market needs, and you continue every day to invest most of your winnings back into long-term sustainability, it's a formula for success.
And I would supplement that with one other thing in terms of, it's not just about investing in assets, and I'm a huge proponent. I mean, people that have been listening to me for years are probably sick of it because I'm a huge proponent of investing in assets because there's no better way to protect yourself than having a portfolio of assets that will pay you even if economy crashes, you lose your job, who cares? I think the other component is investing in your skill sets. right?
Yes.
Marketing, realizing that almost any role you play, in some way you are a marketer, and learning how to be a better marketer, right? Reinvesting in your skill set and your ability, that's also hugely invaluable.
You don't get lazy. Don't start thinking you're freaking amazing because you flipped 4 houses. Don't think because you flipped a house, you bought a house, you thought it was going to sell for 300 grand, you thought you're going to be done in 6 months, and it took you 2 years and you didn't sell it for 300 grand, but you sold it for 400 grand. You did nothing but screw up, and the market bailed your ass out.
Yep.
Don't get cocky. Instead, realize you made some mistakes and fix them, and then do the other thing that I know you and I both do. We network. We have friends. We have people in common that we know who are, this isn't said with reverse psychology, they're smarter than us. Now, they might not be smarter than us at everything, but my guess is what normally happens is you don't get invited back unless they think you add value.
Yeah.
But the other thing of it is make sure you're listening to them. They're probably better at 3, 4, 5 things than you are. You might know somebody who isn't as good as marketing as you, but he's amazing. He's been married for 30 years. There's some value in that. You might know someone, you own 150 rentals. Well, they own 350. You might know somebody, you might have done 8 deals last year, and you know someone who's met 25.
Yeah, you can learn, there's always somebody you can learn from, always.
Yeah. And then the other side of it is too, like I did 200 plus deals. There are people who come to my meetup that did 6. I'm like, oh shit, that's a good idea. It's new, it's fresh, it's something I haven't tried. You know what I mean? You're always open. The other thing is this is going to sound stupid, but it's the truth.
Now I definitely want to hear it.
So it's a good lead. So like people will go to Silicon Valley, right? Like you'll have an idea, or like if you watch that crazy Justin Timberlake movie about like the starters of Facebook, right? Like they had all the right ideas and they had all the same ideas when they were in New York, but they didn't get the funding they needed in New York. They moved to Silicon Valley and they were around like-minded people who saw the vision. And those people ended up launching some stupid ass idea that was built in a dorm room into one of the 25 most valuable companies in the world. But if they would have stayed in New York, they probably never would have gotten there. So if you were in this business, listening to podcasts is great. Starting a group of people that are like you that you can talk to and bounce ideas off is great. And then find other people who are smarter than you. And then do this amazing fucking thing. Shut up and listen. Like, don't tell them how amazing you are. Like I heard early in my life, God blessed you with 1 mouth and 2 ears for a reason. Shut your mouth and listen. So find people who are better and listen and absorb and understand and then ask questions. Nobody is more eager to talk about anything than themselves. It's how it works. So if you go and you find someone who's great, you buy them a cup of coffee, you buy them lunch, and you just flatter them. Daniel, I am just so unbelievably interested in getting to know your story. Tell me about it. But that's the first time that we met. The first time we met, I heard you through a podcast with a buddy. I was like, shit, this guy's in my backyard and he's smart. And I just called you up. I'm like, dude, I heard an interview and I thought you were smart. I want to go to lunch. That's how we met.
Yeah.
You know what I mean?
Except for I think it was beers. Was it beers? It wasn't the night when I lost my truck.
That was a different night.
We won't talk about that night. That's not on this call. But no, you're absolutely right. I mean, I think this market has, in the last run up, has produced a lot of people that were successful because of just the market, right? And a lot of those people aren't thinking about what happens when it's going to come to a stop. And a lot of those people probably are getting cocky and thinking that they have it made, right? So I mean, I couldn't agree with you more. There is always somebody that's doing better than you. There's always somebody that you can learn from. And I love the fact that you said, even the guys that are doing 6 deals, they may be doing something new. It's the hungry people that are just getting started. And it's usually the young people that are getting started. They're trying things that we haven't even thought about. They may not be doing as well as you, but they could be doing some stuff that you could scale.
Right.
Learn from. Yeah.
Or they're amazing people say, hey, will you please call me when you get a deal? I mean, you're doing something like There are people with different skills. There are people who are good at knocking on doors and getting people to trust them, and they find inventory that I can't. There's a local guy in our market who, I don't know how he finds his deals, but I bought 6 from him in December, and I said, look, will you just call me when you get one, please? I want to be on your list. So like how he's doing it, good for him, but he's selling them. I want to be a buyer. So, and other thing is recognize talent. If you see someone who's good, you can fight them if you want. But what I like to do is I look at them and I say, hey, I'm really intrigued. What do you want to do? Is there anything I can do to help? And they'll usually ask you 100 questions. And on the other side of it, say, hey, it's a trade-off. Can I have a shot at your inventory? I would love to buy stuff. And you just start doing that.
I like that. I like that. That's great advice. Well, we're running right at 90 minutes. So I think this was great. Again, I've been meaning to record this call with you for a while because you're not just doing a lot of deals, but I mean, again, I've seen how you're evolving, right? You're evolving with the market and you're sort of evolving your vision, and it's been fascinating to hear about it. And I think you've dropped a ton of great nuggets today. So I'm sure everybody that's going to listen to it is going to get a ton of value out of it. So I really appreciate it. Now, you also do some paid coaching. Do you want certain people to get a hold of you? How can we help you?
So my name is Frank Cava. It's on the screen. If you go to frankcava.com, I've got all kinds of stuff there. I got videos. If you want to hire somebody in your business, you go right there and you click on the hiring link. If there are questions or anything that we can ask that we didn't cover here today, there's an email that goes to someone on my staff who filters them and then gets them to me. And anything you need is there. You can look up our business if you're curious. If you just look up Frank Cava in Richmond, you'll find us. But yeah, anything we can do to help or serve in any way, we'd be more than happy to do that.
Awesome. And if you guys are watching this on my website, I'll post a link to Frank's website right below this video. So, oh, dude, awesome. I really appreciate it. Again, you're a super smart guy that has a lot of insights into this business that I think a lot of people are lacking. So I appreciate you sharing your thoughts, ideas, your story with us. I mean, it's awesome.
It was my pleasure. I'm glad we got to do this over the computer since we're at least 3/4 of a mile apart.
I think you might be maybe about a mile from me right now as we're speaking. If we do this again, we'll just do it in person. How about that?
Perfect. I'll drive.
Sounds good. Thanks, Frank.
See you guys.